Good afternoon, everyone.
Hello.
What are you playing, Paulo?
A guitar.
Uh,
Oh, I'm just practicing some scales.
well, that's awesome. I once owned a guitar. It didn't last very long until I realized that I have no musical ability at all.
Well, some have it, some don't. You got to practice though, man.
This is true. Just like scripts and role play. I make it
Something
seem
like that.
easy. For some reason, it just comes natural to me. Well, thank you all for joining us. Steve will be with us shortly. He's jumping on right now, so we're going to get together. Kind of want to talk about what this whole thing was about. As I've worked with Steve now primarily as my number one loan officer and his team for the better part of the last year and a half, 2 years. And he has single-handedly changed my outlook on how loan officers are supposed to handle. So we had the meeting with Rich Osborne a couple months back where he kind of just danced around some questions and answers on some stuff. And I got a lot of feedback on that. And I wanted to bring in Steve. Steve is the highest rated loan officer in Fairway, which is a national company, so massively successful. But it's not so much his success that I'm interested in, it's his brain. And Steve, as he's jumping on right now, comes from a background in coaching and development. And he is like myself, or I'm the new agent coach for Keller Williams. Steve is now taking on the role as the new LO coach for Fairway. So we're partnering together to kind of bring a bridge of understanding and knowledge out there. And I want you guys to, ask any question that's, perplexing you or giving you any kind of trouble with clients. And Steve's going to, in the coming months, join us for calls. We'd like to do this once a month as schedules, permit. But asking questions about what type of loans go with what kind of houses, or what kind of buyers need what certain types of loans, and understanding how to navigate that complex roadway is what Steve's profession is. So he's pretty awesome at it. He's got a great haircut. So without further ado, I'm going to let Steve start talking and introduce himself. Steve, welcome to the team.
Hi, guys. I'll give you a little bit of background about myself. I am the area manager here in all of Pima County, which in English means that I run the mortgage operations for all of the county for all the different branches as I guess you call it the managing partner on it. But in reality, I just oversee problems and things like that, or things that come up at any of the branch level. A little bit about me. I have been in the industry for 25 years. I've been on both sides of the industry. I've actually been a sales and marketing director for Centex Homes, Richmond American for about 6 years between the two of them. I've been a corporate manager as well as I've been an originator for 22 of those 25 years. So the unique thing about me in the industry is not only have I been doing mortgages the entire time, but I'm one of very few people that are in the origination side that have gone up from the very bottom. So I've done pretty much every job inside of the mortgage industry at one time or another. Where most people, like in the real estate industry, when they start in real estate, they go become a real estate agent right away. For me, I started out as an admin, then I became a junior processor, then a junior underwriter, then an underwriter, and then into origination. So my skill set allows me to know a lot about real estate in terms of some tricks and things that come up during a transaction. Use me as a resource for any of those things. Dan has done it before, but you have a question on a weird property on a listing that you're getting ready to do, and you're like, I'm not sure how I should list this or what financing terms I should put in there. Feel free to, reach out to Dan or myself, and we can get those questions answered for you. And it's a really huge benefit out here because there's a ton of different types of properties and a lot of nuances in Tucson. I mean, between wells, private roads, additions that aren't permitted, all of those kind of things. And those things can really mess up a transaction, but if you handle it up front the right way, it can make the transaction very smooth and it becomes a non-issue for most parties. So we're obviously going to be doing some trainings on specific things today, but Dan really wanted me to get on the phone today to really say any questions that you guys have, what where you think interest rates are going, whatever questions you guys have, just to feel free to, ask the questions, and I'll answer them to the best of my ability. So we'll start. Anyone have any general questions about real estate market, inventory, appraisals, you know, in the crazy market right now? Any questions that you guys have?
Well, the first thing that you said about the interest rates, I mean, if you have any insight on where those are going, I'd love to know.
Absolutely. So here's the perspective on rates for the next, I'm going to say 6 to 9 months. So currently rates across the board, depending upon the day, are somewhere in the mid to high twos, sometimes the low twos, but anywhere between 2.25% and 3% for the most part. Couple of things that are happening in the economy right now that are very important. One, we've got some stimulus packages that are going out to the public from the new administration. And what those mean to the real estate industry, in theory, people think that's a good thing. But in reality, anytime you hear stimulus like that, and I think the stimulus package is going to be somewhere right around 1.9, maybe it might slightly eclipse $2 trillion. What that means to anyone in the real estate industry is that creates an inflationary event. And the one thing about our industry that is a very, very tough part to deal with is inflation is good for real estate values, but is bad for interest rates. And we need both of them. We need both of them to work and be as calm as possible to create a good marketplace. So that's why rates are holding steady right now. So what's happening is, as they create this inflationary tactic with the stimulus package, the Federal Reserve is coming in on the back end side, and they are buying mortgage-backed securities to artificially keep mortgage rates low in light of the inflationary event that's happening inside of the federal government. Now, that stimulus will probably go on for about 3 to 4 months is our estimate. So I'm guessing April, May timeframe will be when that stimulus starts to end, and they'll reassess it. When that stimulus ends from the Federal Reserve, we expect rates the latter part of the year to range somewhere between 3.25 and 3.75%. Now, the question is, does that happen at 6 months, 9 months, or 12 months? And that question will be answered based on when the stimulus starts to end. Because as soon as the stimulus starts to end, there's going to be nobody buying mortgage-backed securities at that volume level, and rates will naturally start to rise a little bit. And when that happens, it will take about 90 days for it to get what we call a mark to market, which is where real interest rates will occur. And about 70% of the marketplace tends to think that's going to be somewhere between 3.375 and 3.75. I brought in the 3.25 part because of the fact that FHA and VA loans will still be in there, and they'll probably be more towards the low threes than the mid to high threes for your FHA and conventional loans. Any other questions on rates?
Do you guys understand what happens to the buying power of an individual when rates go up 1%? So why is that important to your business now?
Well, they can get more home now than they can later, right?
Yes, they can, for sure. And
So
it does.
Sorry.
Go ahead. Sorry, you're cutting out there.
No, I was just going to say, so for example, they could possibly afford maybe like a $300,000 home now, as opposed to a $250,000 home later.
That is absolutely correct. And the income and based on that is a direct reflection on that. So for every $100 increase in payments, it knocks a certain part of the population out of there. So rates where they're currently at gives people a lot of buying power to buy homes right now that they otherwise couldn't afford. And that's why the ideal market for real estate is when inflation is low, creates upward movement in interest or in real estate prices. And that also keeps interest rates low, which is why you're seeing such a drive in the market right now, coupled with drastically low inventory. But that is the real reason why you're seeing everything right now, because in reality, because of where rates are at, it is actually a dual market right now. Even though everyone thinks it's just a seller's market, because of where rates are at, it is also a buyer's market as well right now. even though it's very hard for buyers to get their offers accepted on the first time around right now.
Steve, can you explain how much of a difference the interest rate is when you have a manufactured home? I understand it's higher because the economic life is shorter.
That is correct, but it has nothing to do with economic life per se. So interest rates on manufactured versus single family are normally about 1/4 to 3/8% higher. And the real reason for it is because of the fact that as a manufactured home gets older, it does relate to the economic life, but the quality of that manufactured home tends to depreciate quicker than it does on a single family home. Therefore, it makes it riskier for the lender in terms of resale. So all of a sudden you buy a 2000 manufactured home today, which is 20 years old. And that manufactured home, let's say it has an economic life of 90 years. Well, that 90 years, all of a sudden in 20 years from now has 70. And it's not so much the economic life regarding it. It's just that to repair or replace manufactured homes normally requires, once they get to their economic life ending, you to put a brand new manufactured home on there, or do replacements directly through the company that did the manufactured home for warranty items and stuff like that, which makes it a little bit harder for them to be maintained than you would on a single family home. And that's a lot of the reason for the interest rate difference. And the other difference is manufactured homes have a very historical factor of not increasing in value near as much as single family homes either. They don't always go up in value. And that's the other reason behind it.
Thank you. Is there a difference for condominiums and townhouses?
Is there a difference between condominiums and townhouses? Yes, in terms of rates or in terms of the property?
In terms of the interest rate for the loan to buy it?
Yes, there is. There is an adjustment for a condo, and it's for the exact same reason, but it's a different risk reason on it. And the risk is on a condominium, you do not own the land underneath you. You only own the wall from the walls inside. So if anything happens to that condo complex, as an example, the roof goes bad. The roof going down on a condo complex requires them to do a roof certification for the entire set of units that it encompasses. So if it was 50 units, that roof work could be $250,000. And that could put a strain on the HOA, therefore making it more risky. And that is why you see an adjustment on condos with regard to that.
Sir, is there any differentiation on single family residences, whether they're traditional site built versus the new modular that's being used more and more?
Not normally from a modular home perspective on it. The modular homes are still around, and they are actually homes that are really built. They just come in like a pack. Like I call modular homes it's real estate from IKEA. So it is actually a real property from there. So it's not significant. The difference between the two homes and the economic life of them is still pretty good because they are actually still built with brick and mortar.
Yeah, okay.
Yep.
What are the difference between, say, like, I understand a conventional and a VA, but like USDA and FHA, I mean, I know they like vary from who qualifies, interest rates, which home qualifies. So maybe you could give us a breakdown of that.
Say that one more time. You cut out there.
Okay, sorry. The various loans like USDA, FHA, VA, conventional loans. I know, like, especially with USDA and FHA, based on location, based on the house itself, there's different there's homes that just don't qualify for them, and then there's other homes. What are we looking at when we are saying, well, this home will qualify for this type of loan?
So it can be a lot of different things on it. That is a very complex question to go through a lot of different guidelines on there, but I can give you some of the general things that have an effect on financing, on whether or not you can do one type of loan or another. For example, if the property was flipped in the last 90 days, you cannot do an FHA loan on that property until the 91st day, regardless of the reason why it was flipped. The other things that come up very, very common, unpermitted additions. Unpermitted additions on FHA, they are supposed to bracket those additions and come up with a price per square foot based on them not being permitted. So in other words, in English, you don't get dollar for dollar value. We're on a conventional loan or a VA loan. If they're done in a workmanlike manner, they will still give you the general living or the gross living area as a total. So there's some things inside of it where you get, say you have a house that has 2 rooms that are unpermitted additions, they may not want to go FHA because they're worried about the appraisal coming in a little bit low. So they're going to go, I'm going to market this to conventional and VA buyers only. Some other things that come up are road maintenance agreements. Road maintenance agreements have a variety of guidelines, including conventional loans, that have some ramifications on the ability to get the loan done on that property. So FHA does not in and of itself require a road maintenance agreement. VA requires one all the time. Fannie Mae, which is the conventional side of the loans, is one of the 2 conventional outlets. They require a copy of the road maintenance agreement. Freddie Mac does not. So there are a lot of variances inside of that. And the other big thing that comes up are well agreements. So well agreements, especially on FHA, no matter what well you're looking at, if it's a shared well, it cannot be more than a 4 share on FHA, no ifs, ands, or buts. Where on a VA loan, there is no limit to the number of shares that you have on the well. You just have to provide what is called a pump, water, and well test to confirm that that well can generate simultaneous water to all the units in the share. And it's done through a couple of different companies in town. Most people will use, for all the well stuff, most of them will use Catalina Well and Pump, but there are a couple companies in town that do it. And those tests tend to take about 7 to 10 days. But knowing that up front, when you're going in either to put an offer or list a home, can create a lot of, not knowing any of those things up front can create a lot of upset inside of your contract. Things like a flood zone, all of those things come into play as well. Flood zone on manufactured, not every type of loan will allow that. FHA gets very weird about flood zones and manufactured homes, but they will allow it, but there's certain factors that have to be in place, like they want an elevation cert and things like that. So those are the big things that I tend to think of that come up on properties that will adjust the type of financing that we have to do. The flip rule of 90 days, wells, road maintenance agreements, and unpermitted additions are the 4 big ones.
Great questions. Keep them coming, guys. Are you guys getting a little bit more information you did the last conversation you had with a lender? The one thing I'll promise you about Steve, he's going to tell you the right answer if you like it or not.
So valuable to know.
Yes, and knowing that up front, especially when you're going in on the buy side. So when you go on a buy side and you go into this transaction and you've done all the research on that property, knowing this, you know, because you've looked up and you've called the agent and said, okay, what kind of shares on this well? It's a 2 share. So I know it works FHA. To knock all those things out in advance also creates a lot of trust on the listing agent side that they know that you're putting in a serious offer. So the better armed you are, the better chance you have of getting the offer accepted. And I will tell you guys from the lending perspective, and Dan, I don't speak a lot about myself in terms of the marketplace, but on the purchase side of business, when my name's on a pre-qual versus a lot of other names, they can pretty much assume at this point, because I've been in the market long enough, that I've done every piece of due diligence on that property already to make sure that it qualifies for that type of financing. So much so that, in fact, sometimes I will call the listing agent because the buyer's agent isn't necessarily comfortable with asking some of the questions that I have to ask because they're worried about wording them wrong. That I'll literally ask the buyer's agent, hey, can I call the listing agent and ask a couple of questions to make sure we're not going to have any issues on this offer? And then I will also talk to them about your offer and hopefully get them some insight as to why they want this home and hopefully get a stronger offer in. It does help sometimes to tap in lenders during the offer process other than just a pre-qual. Because remember the one thing about a pre-qual, especially in today's market, when you're dealing with 4 or 5 offers on every home, if not more than that, the pre-qual is a story that's only on paper. When you actually can talk to them and develop a relationship with them, that is where it starts to go. So all of a sudden they feel comfortable with you as an agent. They go back to their sellers, and this is what the conversation looked like from the listing side. And Dan, I'm sure you've done this and you can reiterate some of this if you want. All right, I've got 4 offers here. I've got 1 cash, but it's $30,000 low. I've got these 2 are definitely above it. 1 is FHA and 1 is conventional. This FHA loan is through Wells Fargo, and they notoriously aren't able to get loans done. This loan is from Guild, and they're averaging about 6 to 7 days closing late right now. And this pre-qual is from Fairway, and they're closing 99% of their loans on time right now. Those kind of conversations come up with the seller because it's not always the strongest offer when everyone is looking at it. It is also what comes into the strength of the offer is the quality of the agent on the other side, the quality of the lender on the other side, and the ability to execute to make everyone feel calm and protected during the process. And using that as a sales tool, especially on the buyer side, is very, very important to develop rapport with the listing agents to hopefully get them to accept your offer, because that is the goal. There is no second place on an offer unless they fall out. Because once you miss the offer, so you might as well just put your best foot forward up front, and doing a lot of that due diligence up front with offers or on your listing so that you know what you're getting into is very key to make the transaction a lot smoother for everyone. You have anything to add to that, Dan?
I think Dan had to step away. Here he comes.
Yeah, sorry, I had to step away. There was a really big boom in the backyard. I want to make sure no one's dead. So
no worries.
Oh.
So I was talking about being prepared in your listings and knowing all the due diligence and stuff about the properties and actually communicating it with the agents, and that building rapport and creating confidence that you're actually going to be able to manage the transaction alongside them. And I just asked if you had any insight above and beyond that, Dan.
Well, the one thing we talk a lot about is relationships. You know, real estate equals relationships. So if you're be able to communicate with that on the other side with your co-agent, your co-broker, then they will take a better lead from you. And as a listing agent, you can utilize that for a higher price point and better offering for your client, because you're going to get less during the inspection periods, less during the Binzer period. And then as a buyer's agent, to have the communication with your entire team, lending, title, inspectors, and everything, it creates confidence that your side is willing to do what it takes to get the job done, so that the seller is less reluctant to do things. It all comes down to when they know you're a team player, you will get results like a team does. If you want to work like adversaries, it's going to suck.
So I had a question.
Yes.
On that, what you just gave us an example of those four different scenarios on the loans. How is one to know all that information up front? Like you were talking about one of them being, 7 to 10 days late on closings, the other one running on time, stuff like that. Because that was one of the questions that I had as a listing agent. When we receive offers, let's just say we receive 4 offers. So you present those offers to your client. What's the best way to do that? And you know what I mean? Like that we know all that information ahead of time.
So when a listing comes up, what I do on the property for me personally, so I don't have access to MLS like you guys do, but I can normally get a lot of information on it. So if it's things like, for example, if it's a manufactured home and you call me or text me saying, I need a pre-qual for this manufactured home, 95% of lenders will do what, Dan? When you ask for a pre-qual on a manufactured home, what will they do? See if Dan knows the answer to this.
They'll just give you a roundabout answer without doing much.
No, they'll just send the pre-qual over.
Yeah, they won't.
They don't actually give you an answer. So when I get a request for a pre-qual on a manufactured home, I dial up my agent and say, okay, tell me a little bit about this manufactured home. Is it on a well? Yes. I go, in the listing, is it a shared well or is it a privately owned well? It looks to be a shared well. Perfect. I go, is a copy of the well agreement in the listing? Because I don't see that paperwork like you guys can see. And sometimes it's uploaded in there and sometimes it's not. They said, you know, I don't see that in there. I'm like, okay, so here's what I need you to do. I need you to contact the listing agent, let them know that we're submitting an offer, but we want to confirm one thing to make sure we're not wasting anyone's time. That is very important in this market to use those kind of words and things like that. And say, I'm inquiring about the well, and I want to make sure the number of shares that are on the well. And she comes back, the listing agent comes back and says there's 6 people sharing this well. Okay, perfect. So that basically tells me that I can't do FHA and I have to get this buyer qualified conventional. So this buyer could qualify both ways. We don't know what makes the most sense for him, but if you submit a FHA pre-qual to a listing, because the listing agent doesn't know the guideline either, and they put FHA financing available, and all of a sudden we know that it's not going to work, finding that information up front is huge because the listing agent is now seeing very much that, one, you're on top of things, and number 2, you're handling the potential problems that could come up in a transaction on day 1 versus the regular time that people deal with issues, and that's as they come up during a transaction. I will let you know one of the biggest things on a manufactured home that you hear lenders waiting all the time for. They're like, we're waiting for the appraiser to call it out. On every manufactured home, for any type of conventional financing, there is what is called an engineer cert that is required on every one of them to make sure that the property is structurally sound, it hasn't been moved, and that it has the right construction to be permanently affixed to the ground. Probably in the last 60 days, I've heard no less than 10 lenders waiting for the appraisal to come in to order it, even though it's a requirement on every one of the loans, because they are dealing with things as they come up versus dealing with them up front. On every manufactured home we do as a lender, we order the engineer cert on day 1, and here's the reason why. In that engineer cert, if there are things that need to be fixed, like the pillars aren't to code, or the skirting on the manufactured home isn't to code, those are items that you can add to your BINSR to get them replaced, and they become lender required repairs as part of the BINSR. So you're addressing all the repair items at the same time versus doing it at 2 or 3 different junctions during the transaction. It appears massively different to the listing agents, but getting that information is very simple because the listing agents will normally have that information. Now, if they don't know the number of shares or all that stuff, I'm going to err on the side of caution on that I'm going to say, let's start with the trickiest type of financing, which would be FHA. And then I'll put a note in there. Once we have the confirmed number of shares and the additional comments, we can convert to conventional if need be, but the buyer's preference is FHA. So I give them some options inside there if we don't get the answers, but most of those answers will come from the listing agent and or public records, or very simply, you can call me, I can look up public records, you know, things like that, especially when you're going to put in offers, or call the lender that you're working at to see if they have any insight into what they're going to need for this property. But the more information you have up front, the better. And you can either get it from the listing agent, the lender, or your own resources inside of Keller as well, because there's a lot of resources inside of Keller too to ask questions for.
Was that engineering cert, was that a conventional loan for only the conventional loan?
It is an engineer cert is required on a conventional FHA and VA loan.
It's Steve.
Yes.
You said something about if the mobile home has been moved, that's part of the certification, or what if it has been moved?
If it's been moved, very simply, what that means to you is that the property is no longer considered structurally sound, because that means they would have had to take the home apart to move it. And that creates a structural integrity issue, and that property cannot be financed at all.
Oh God. I'm getting ready to list a double wide, and they're saying it's a 2007, but it was put on the property in 2012. That means it's been moved.
Not necessarily. So that isn't necessarily what that means. So what could have happened is they could have put that property on there in 2007 and didn't get it affixed until 2012 when it became real property. It could have been sitting there the entire time on its axles though.
No, actually, I'm familiar with the property. I know the trailer that was there before. I knew who lived there. So they actually moved the old trailer out in 2012 and put this trailer in there, and it still isn't affixed. Actually, based on the records, it's not affixed yet.
Yeah, so if it's not affixed yet, then yes, you are probably accurate from there that it has been moved, and that could definitely become an issue for sure. But you won't know that until you get your engineer cert ordered.
Okay.
I have a question. I have a really, really old trailer sitting on a property. It's been there over 40 years and it's never been affixed. Does that mobile home need to be affixed?
Yes, to do any conventional financing, the mobile home needs to be affixed. Otherwise, you're going to get what is called RV or utility financing, because that is actually still considered a car.
Yep, mobile.
It's a wrecked vehicle. And if you notice on that property, they don't pay real property tax. They pay personal tax on that property every year, not the real property tax.
The property tax is on the land, and then they pay personal property tax on the trailers.
Yes.
You got it exactly. Yep.
The way I tell my clients is it's kind of like buying a car.
Okay, so to go back to that engineering cert, so I have a listing that we're waiting on the appraisal. So if I can help move things along, it's affixed and we have the affidavit of a fixture. So I still need to order the engineering cert. And where would I do that?
The engineering cert, you can order them from, let me just get one here. It's Lloyd Rogers in town. Hold on here. I'll give you his phone number. Okay, so it's Rogers Civil Engineering, and the phone number is 520-888-8533.
Thank you.
Yep. Now I will tell you, on the engineer cert, they can be ordered by either the lender or the agent. It doesn't really matter. It's just make sure that that engineer cert gets over to the lender if you order it on your side on the inspection, because if not, I guarantee you they'll order a second one, because it was something that is normally ordered by a lender.
So I should check with the lender first to make sure
Yes.
it's ordered. Okay.
And here's the question. Here's the answer that comes back. So, and this is, you're going to hear this, especially if they haven't got one ordered yet. If they haven't ordered it, they're like, well, the appraisal's not in. I don't know if we need one. That'll be your answer right there to tell you that you're literally looking at a loan officer who's waiting to be told what to do versus managing in advance, because it's going to be a requirement on a manufactured home either way. They just don't want to spend any money until it's done. We look at the $150 that it costs for an engineering cert as certainty that we're going to be able to get the home closed, and would rather know up front than wait for an appraisal to get done to order it.
Right.
You just look at it a little differently at Fairway.
All right. Thank you.
And just make sure if you are calling Lloyd Rogers, I just they just did one of mine. Make sure they provide you specific pictures because we were not successful in that.
Specific pictures on repairs?
Yes, yes.
Absolutely. And one thing to know on it, whenever Lloyd or his team does an engineer cert, you will also see on there that they give you recommended contractors. If they use one of those recommended contractors, I will let you know that if he use one of them, he'll call the contractor directly to sign off on your cert. So you won't have to get pictures and all that stuff done. But if they don't use one of those recommended contractors, then he will require proof of the work being done.
And so in order to get it affixed, you have to go and have an engineering cert done first?
To get it affixed, the engineering cert is part of the process on it. And then you just go to Pima County and there's what's called an affidavit of a fixture that you fill out and you bring it to the county to convert the property from a single or from a RV to a real property.
Okay.
And that form can be found on Pima County's website.
I'm sure Pinal would be the same, right?
Yeah, Pinal would be the same.
Okay. Thank you.
So, Mr. Lemmons.
Yes.
Do you, let me see if I can ask this question. Like, I've been doing engineering certs for mobile home, manufactured home affixation, and FHA and VHA and HUD and all that stuff for a couple of decades now. And it's only been in probably the last 10 to 12 years that we do the letter of the engineering cert as part of the design process for the fixture, and then that goes into the packet that goes in for the county. So what if you're saying that if a manufactured home has been affixed for 25, 30, 40 years, before that was a requirement to have that engineering cert, you're requiring an engineering cert letter to see that that it's up to grade to the modern code? Is that what you're saying?
Yes, that is correct. So in reality, I will let you know 40 some odd years ago. So anything prior to 1976 wouldn't naturally be affixed anyway.
Right.
So the affixture process started after 1976 when the manufacturing requirements changed.
Yes.
So we wouldn't necessarily require it to be up to code. The engineer cert would be, if the property is already affixed, we're going to look to make sure it's affixed properly, because the actual requirements for manufactured affidavit of a fixture between the pillars, the skirting, and the blocks you got to use have not changed much over the last 30 to 40 years. So as long as the engineer can verify that the property is stable, not going to move, all of those things, I've seen Lloyd and his team do one from 1980 and not ask for one thing on it.
Yeah, we did one from 1979, I think, and it was fine. In fact, they were done better back then than they are now.
They are done better back then than now. You are absolutely correct, because they used to be made with solid block, and now they don't use solid block. They actually use block like you build fences with, and they half fill them with cement versus completely filling them like they used to. So there's a lot of subtle changes. All the cut costs primarily is what I can see, but I don't know the real answer for that. But we definitely have seen some changes in the way they do it.
Yeah.
Yep.
So tie downs are also a concern as well, aren't they?
That is correct.
Fixture.
And that's part of the affixture. The tie downs a lot of times are what comes up on the near cert of not being done correctly. Correct. Any other questions around manufactured or that?
No, Steve, I have a different question.
Okay.
So I have a couple of clients right now that they're thinking about using USDA loans. I believe based on their income and their requirements that they may qualify for it.
Okay.
But I've heard from two different lenders, I've heard different amounts of income for them to qualify. One told me they need to be making less than $54,000 a year, and the other one told me that they need to be making $90,000 a year or less. So the first question is, I don't know what is the limit for USDA loans. And the second question is, online when I researched the loans, it says that it doesn't have any PMI, but then it tells you that it has an upfront cost that is charged at the beginning at closing, and then it has a 0.35% that goes on the loan, pretty much on every payment for the life of the loan. So
That is correct.
Confirm? Okay.
Yep. So here's how USDA works specifically. And PMI is a loosely used acronym. PMI actually is only on one loan. PMI stands for private mortgage insurance, and PMI only occurs on conventional loans. On FHA, it is not called PMI, and then I'll get to USDA as well. So on PMI, it is actually, or on FHA, it is called MIP, or mortgage insurance premium. And there's an upfront version and a monthly mortgage insurance premium, but FHA refers to it as MIP. Now, USDA likes to be very unique and special, and they call it a guarantee fee. So when somebody asks the question, do USDA loans have PMI on it? The answer is absolutely no, it does not. But it does have a guarantee fee of 1% upfront and 0.35 monthly. So it is not PMI per se, but yes, it is actually a form of insurance, and it's a form of insurance to protect the USDA program from going under. So private mortgage insurance goes directly to an insurance company that they basically have a conduit there that they protect against losses on real estate. USDA and FHA are both government entities, so they basically take that insurance, put it into a slush fund to protect against losses in the program, to continue the program going forward through the United States government. And that's the reason why you hear it said differently sometimes, and that answer is different one way or the other. Now, the income question, I don't really understand how you would be getting any different answers from that. And I can send this to Dan for any of you guys to do it, or you can go right to USDA.gov and pull up their income limits. So in Pima County, which is basically all of your Tucson MSA is what we call it. So you're going to want to go to the moderate income level. And when somebody is telling you that they're at $54,000 as an income level, there's two types of USDA loans. There's one that is delegated, which lenders like me do. Lenders like Nova, Guild, SunStreet, Wells Fargo, Chase. We do what are called guaranteed or delegated USDA loans. There is another type of USDA loan that is directly done through USDA as the lender. There is no other lender involved other than USDA itself, and it is called a direct USDA loan. And the direct USDA loan requires the low income levels of $54,000. But for any loan that you're doing out there with a regular lender, the income limit is very simple. For families of 4 or less, it's $90,300 in Tucson. For families of 5 and more, it's $119,200. And there are no exceptions to those income levels on USDA. And no lenders have a varying amount. These are set by the federal government every year.
So let me ask you one follow-up question on that. So let's say the clients that I'm working with right now, they're not married. So they have been together for 11 years, but they're not together. Would the lender take both of them, their income, or just one?
So if they're both on the loan application, or they're not on the application, but they live together. So here's some things about USDA that is very tricky. So say you have a fiance that is on your bank accounts and we see income coming in from her, but she's not on the loan application. There is a certification process inside of USDA that we have to verify household income, because the income limit is based off of the household, not just the person applying. Very unique in USDA. So if your borrower makes $70,000 a year and his or her fiance, spouse, significant other that lives with them makes $50,000 a year but is not on the loan, that is a problem and your loan will be declined for that reason. So you need to get household income when you're dealing with a USDA loan versus qualifying income for just about every other loan type.
Okay, got it.
So Steve, I was told there was like hoops to jump through if you're going directly through the government for your USDA loan. I actually have a client right now that is waiting for a packet before she contacts the lender because she's trying to weigh the difference between the guaranteed and the direct. What are the main differences? Because she would probably actually qualify for the direct as far as her income goes.
It is about 0.5 to 0.75% lower in rate. It is a great program, and I will not beat around the bush on this. It is a pain in the butt to get one. They are not easy.
Yeah.
They take like 8 to 12 weeks just to get the approval process done sometimes. They're not fun. And in this market, I don't think anyone would even take a USDA direct pre-qual because of the amount of time they take to get done.
You mean after they've been approved, how long it takes for the process once you put
Yes.
in?
Yep, absolutely. It still takes about 8 weeks to get that loan done right now. They're very arduous loans.
So going through a lender and doing a guaranteed USDA, you're in a better position.
Absolutely, you are. From a timing perspective, yes. Okay. Now, the other part of USDA that you guys need to know is that once we get approval on a loan, it is also the only other type of loan that requires a second approval. And a USDA loan requires what is called a conditional commitment from USDA directly. So if you've ever had a deal that's USDA and they're in process and all of a sudden you're like, why can't we get docs out? Like we don't have the stuff we need from USDA. That stuff that they need from USDA is the conditional commitment, and you cannot close until you have that commitment because that actually reserves the funds from the federal government. And that process takes about 7 to 10 days currently. Because of COVID, they're very behind.
I do actually have a current buyer that is qualified for a USDA loan. The lender told me to give at least 2 months on the contract before close of escrow. But I'm telling you, he's getting 2.25% interest locked.
Yep, absolutely. It's a great loan. There's no question on the loan being, I mean, it's great financing from there for sure.
What else you guys got for him? This is awesome. The last time you guys had a lender on, you didn't ask any questions.
Doesn't USDA have to be out like in the sticks, like Red Rock or something like that?
Was he asking about location? I couldn't hear him that well, Dan. Was he talking about locations on where it's available?
Yeah, he's asking, doesn't it have to be out in the sticks like Red Rock and out in Pima County?
It does have to be somewhat in the sticks, but a little known things that you guys should know on it when you go to the map. Places like Vail, Corona State, Tucson, Sahuarita, those places are still considered rural because they have not adjusted the census until this year. So there's some opportunities that are not as far out as you would think, even though they feel out, but Sahuarita is a big city now. I mean, it's not, I wouldn't call it rural at all anymore. But you still will see USDA loans being done in that area for sure. And if you guys ever have questions on whether or not a property is USDA eligible, you can Google USDA property eligibility, it will pull up their nationwide address database. You put in the address and it will say property is eligible, property is not eligible. It's very easy to do.
It adds an extra layer of marketing to your listings too, that when you can put the different types of loan types. And as we have Steve back on the calls, we're gonna discuss more each loan type a little more in depth and what the house requirement for that is. Because oftentimes not knowing that you can't put a flip on the market for 90 days creates a big issue for some people. People don't know that. So you got investors that are working with stuff like that. Also knowing the requirements for FHA, VA, what the house needs to look like, what they're critical about, what repairs or other items of concern pop out the most, you need to know. So that's why I'm glad to have. What other questions you guys have? You got his attention for a little bit longer, even though we've lost his image completely, just a blank screen of Lemmons.
So just to clarify, a flip is just anything that is going on the market before 90 days, correct?
No, a flip is a house that someone buys with the intention of reselling it quickly for a profit by either increasing the property value through repairs, additions, or other, physical changes to the property. It's a home that's bought with the pure intention of profit.
Dan,
Adriana.
but you can, even if you're flipping, you can list it in the terms. You can list it only cash or conventional, even before 90 days.
Right. Just we want to make sure you
Or
can't.
VA.
Or VA.
Or VA.
Yeah.
Or USDA, if it's in a USDA eligible. The only type of loan that has a flip rule is FHA.
Right.
So if you have a property ready to be flipped, you don't have to wait 90 days.
No.
You just how do you say that? You just you won't give the opportunity to FHA loans, and most investors anyways, they don't even consider FHA loans if they have conventionals.
The difference is the amount of money you have to put down, 3.5% compared to 20%.
Well, no, on a conventional loan, you can do as little as 3% down.
Really?
Yes.
Yeah. First time home buyers, as little as 3% down. If they've owned a home before, it's 5% down.
Oh, okay.
But that's only if they're living at the property, correct? So not like an investment property for rental.
Say that again. Somebody was talking about investment for a rental, but I didn't hear them.
So the conventional, it cannot be 5% if it's going to be a rental home.
That is correct. Then it's a minimum of 20% down.
Okay.
What if it's multifamily?
Multifamily investment or multifamily primary?
Both.
Multifamily primary, when you get to, 1 to 2 units, you can actually do 5% down. When you get to 3 units, it's a minimum of 15% down on a primary. Most of the time it will not approve though until you get at least a 20% down. And on investment property, multifamily or multi-unit purchases, it's a minimum of 25% down.
Yeah, because we do have some of our agents here that work with investors. So we want to make sure you guys understand that investment properties do mandate a different down payment structure. So.
Yep.
Does that apply to VA when, say, a veteran's going to live in one of the units and rent the other 3 or so out?
Yes. So on VA, it's 100% financing regardless. FHA
Right.
for units is also 3.5% down regardless. So those don't necessarily apply. That was only for conventional loans for those loan to values.
Gotcha.
Where can I send my buyers? Like I have one who is interested in buying a home, but she needs a little help with the down payment. And
Okay.
she's a teacher. And then the second one happens to be, she's not a certified, she's not a nurse, but she works for the VA. So where would I send them to go and apply for help with the down payments?
So that is actually primarily done through the lenders themselves. So we actually have access to probably about 20 or 30 grant programs in Tucson, and they are normally facilitated through the lenders themselves. So it'd just be your first mortgage lender that normally would structure that. And we would, like, if they were going to do like a wish program or some other program, we would send them directly to the institution that handles the class for that to get it started and get them ready to get into contract.
Good to know. Thank you.
Uh-huh.
How does all the mortgage, how does that work on land only?
So land only is not, it is real property per se, because, you know, but there's only certain lenders in town that will do that. And those lenders are normally like Washington Federal, US Bank does them. National Bank of Arizona will do land loans in Arizona. They're very tricky to get, but there are a couple places that do them. Most traditional lenders do not do them, and don't let those traditional lenders fool you when they say they can do a land loan and then they have to broker it somewhere to get it done, which means they lose all of their control, which means they might as well just go straight to the source. So I will let you know, me personally, when somebody has a land loan question or a land loan that they want to get qualified for, I don't try to make money off them off of that at this point, because it could be a disservice to my agents. I literally send them directly to the source to get it done. It's normally a much smoother process for everyone.
Thank you.
Awesome. I got time for one or two more questions if you got it, and then we can do it on the next one as well.
What were the other banks again, Steve? What were the land banks?
National Bank of Arizona, US Bank, and Washington Federal.
Yeah.
I have a question about conventional loans. So I've got a property that's listed for $49,000. It's a fixer-upper in Winkleman. You're saying that they can get into a conventional loan for 3% down. What is the house situation? I know there's a lot like of regulations with USDA and FHA. What about conventional as far as chip paint and roof and, you know, the quality of the house as it sits?
Type of loan. So when you say that it's a fixer-upper, what is the fixer-upper side of it? What is it?
So it needs a roof repair, it needs flooring, it needs 2 fascia boards repainted, and it needs the fascia painted. Other than that, it's a very quality home. I mean, it's priced for an investor, but at the same time, I've had a lot of interest from locals that would love to get in there and fix it up themselves, and it's livable as it sits.
Yep. So I'd say that's conventional loan, ideally. Now, the one thing you got to worry about when you get into $49,000 sales prices, most lenders will have a limit, a bottom or a floor of the lowest loan they will do. For Fairway, it's $45,000.
Okay.
The reason being is because in Arizona, there is a high cost, very strong high cost law in Tucson, and in all of Arizona for that matter, that makes it very difficult to charge escrow, title, and lender fees on a home of any lower than that, because it doesn't meet the cost tests.
Okay. So you think it would approve for a conventional?
Yeah, based on what you're saying, it may have some minor repairs from it, but nothing, not near as significant as FHA, that's for sure.
Thank you.
Uh-huh.
There's a lot of questions in there about construction loans, and we'll get to those in the next call, guys. We'll save them. More calls you come across that you need help with a lender, we're going to bring Steve on as his schedule permits. If we can do this once a month, that'd be great. We'll get that information compiled. If you didn't see in the chat, I put Steve's contact information in there. If you do need some service, like I've said, this is a little business plug for him. Not that he's directly doing the loan officering much in his role as management, but his team work in his manner. Just like, you know, we learned from Keller Williams is people don't work for you, they work for your standards. So I would say that you are in the best of care when it comes to something like that. So if ever you come across a question or something that's random and you need some help, reach out. He's here for you, as well as myself. But Steve, we want to say thank you so much for your time and joining us this afternoon. We appreciated your knowledge and your input. Guys and gals, did you like it?
Yes.
Yeah, thanks, Steve.
Thank you, Steve. Fabulous.
No problem, guys. And like I said, like Dan said, if you guys have any off questions on it, if you email me some questions specifics, we'll get back to you for sure pretty quickly. And we'll, even if it's a question regarding a guideline or something like that on our property, we'll attach the guideline so you have full information on what's going on.
Awesome. Thank you.
Awesome, guys. Well, thank you so much for your time and attendance and asking some really great questions. We appreciate it. We will have another call Thursday at 2:30, same time. Join in. We got some good stuff to go over. The rest of you, have a wonderful day. Go kill it. Go do something great and enjoy your Mondays.
Thank you.
You too.
Thank you.